ranging from 10% to 12.5% on goods from 60 economists, citing concerns over inadequate enforcement of bans on products made with forced labor. The measures took effect after temporary global tariffs expired following a U.S. Supreme Court ruling that struck down a broader set of tariffs introduced earlier this year. South Africa is among the countries affected and faces the highest tariff rate of 12.5% on exports to the United States. Several governments have also criticized the move, describing the tariffs as unjustified and harmful to international trade. Australia says it will continue engaging U.S. trade officials in an effort to have the measures reversed, while New Zealand has also expressed disappointment over the decision. The latest tariffs are expected to increase trade tensions and could have economic implications for affected countries exporting goods to the U.S. market. In South Africa also, a high court in South Africa has temporarily halted parliamentary impeachment proceedings against President Cyril Ramaphosa over Fala Farm scandal. The court granted an interim order pending a judicial review of a 2022 independent panel report that found the president may have breached the constitution. The case centers on the 2020 theft of $580,000 in undeclared foreign currency hidden at Ramaphosa's Fala game farm. The president has consistently denied any wrongdoing, maintaining the money came from the sale of buffalo. Parliament initially rejected the panel's findings, but the Constitutional Court overturned that decision earlier this year, paving the way for an impeachment committee. Ramaphosa has challenged the legality of the panel report with a review scheduled for September. The court's ruling delays the inquiry while the legal process continues, although analysts say removal from office remains unlikely if proceedings eventually resume. In the United Nations also, 6 candidates competing to become the next UN Secretary General have pledged to restore the credibility and effectiveness of the global organization. During a debate in New York, the contenders outlined their plans to address conflicts, improve reforms, and strengthen the UN's role in international affairs. The candidates include Chile's Michelle Bachelet, Ecuador's Maria Fernanda Espinosa, Argentina's Rafael Grossi, Costa Rica's Rebecca Greenspan, and Guyana's Caroline Rodriguez Briquet, and Senegal's Macky Sall. The representations came as the United Nations faces financial pressures and criticism over its ability to respond to global crisis. The selection process begins with a Security Council vote on July 30, where members will hold a secret ballot to identify preferred candidates. The successful nominee must secure support from the Security Council without opposition from any of its 5 permanent members before being formally appointed by the General Assembly. The new Secretary General will assume office in January 2027. In Ghana, Asantehene Otumfuo Osei Tutu II has commended the Inspector General of Police, Christian Tete Yohuno, the Ashanti Regional Police Command, and IGP Special Operations Team for their effort in combating crime and improving security across the country. The commendation came during a courtesy call at the Menchia Palace by the Ashanti Regional Police Commander COP Arthur Oseakoto, accompanied by the Director of the Special Operations Team, Superintendent Augustine Dawson Amoa, and other officers. The visit introduced the team to the Asantehene and highlighted the police administration strategy to strengthen intelligence-led policing and public safety. Otumfuo noted that the team's operations have contributed to reducing drug trafficking, robbery, human trafficking, and other crimes in the Ashanti region. He urged the officers to remain disciplined, professional, and committed while prioritizing their safety. The Special Operations Team reaffirmed this commitment to protecting lives and property and supporting national peace and security. Also, government has begun the first phase of its free primary healthcare policy targeted 150 underserved sub-districts across the country. Presenting the 2026 mid-year budget review in Parliament, Finance Minister Dr. Kasiel Atuban-Forson said the program has moved from planning to implementation following its launch in April this year. More than 24,000 pieces of medical equipment, have been distributed nationwide to strengthen diagnostics, emergency care, and maternal and neonatal services. Government has also deployed motorbikes, tricycles, and mobile outreach equipment to improve healthcare delivery in hard-to-reach communities. Construction of health kiosks and container-based health posts is underway alongside upgrades to existing primary healthcare facilities. Community screening for hypertension, diabetes, cancer, and other non-communicable diseases has also been expanded. The current rollout focuses on the 150 selected sub-districts, with further expansion expected as implementation of the policy continues. Your lifestyle, leisure, and business radio. And as mentioned earlier, today we're having a conversation about the mid-year budget and the monetary policy, and we are going to analyze the sole question of whether Ghana's economic recovery is still on course. We'll take a very short breather here. When we come back, my guest is seated in studio. We'll delve into the main conversation. Do not go away.
101.9
Of course, on Z101.9 FM. And today's conversation is on the mid-year budget, and we're going to check whether Ghana is still on course on this economic recovery. I have with me in studio McJordan Sikanate, Senior Research Associate with Laureus Africa. McJordan, you're welcome.
Thank you.
And shortly, I'll be joined by John Che, who is a financial analyst, and together we're going to unpack this loaded concept, or is it a myth, of whether we are on course on our economic recovery. So let me find out from you, McJordan. In fact, yesterday, I had my little niece. We were watching something on TV. The finance minister was on TV. You know, he went to some media houses to have a conversation. So she came to me and asked me that, she see me watch something. She did something on TV called Mid-Year Budget. She went out to get something. She saw everybody watching it. She was like, this mid-year budget thing people are talking about, what is it? So I told her I'm going to ask my guest today. So since you are the expert, please tell her. She wants to know this mid-year budget thing we're about to talk about, what is it?
Okay, thank you once again for having me, and a very good morning to your listeners and then viewers as well. So the mid-year budget is a policy tool, right? Usually read around the mid-year, usually in July. But before that comes in, there must be a main budget, right? Which is read like a year prior. So in that budget, the government states out what exactly they want to do for the upcoming year. And so in 2026, right, the budget for 2026, which was reviewed this week, was laid in Parliament last year, I think November, right? So it laid out certain key priorities for government. I think expenditure was pegged around 302 billion Ghana cedis, right? And then these 302 billion Ghana cedis, it is broken down, and then government makes it clear how it's going to spend that. But as of course, government is not going to do all this with our own money, because I mean, we have scarce resources. We all know that. So some borrowing will come in. Okay, so government lays out all those things, and then as well we set up like target for ourselves on a macro level. Let's say government is going to spend within this amount, and it is expected that inflation will range. I think our target is 8 plus or minus 2 percentage points. Okay. Also, I think I've mentioned the expenditure side in terms of our FX, right? The story around FX, which is import cover, we're expecting it around 3, and also economic growth, right? 4.8%. So government will lay out all these things at the start. Then mid-year, we come to review and be sure that you said we're going to do A, B, C, D. Are you on course with it? And we check, and then I think Parliament deliberates. Beyond that also is the fact that, I mean, you realize that at the start of this year, other factors have come into play. For instance, the war in the Middle East. Government, we already know this was going to happen.
Even flooding.
And yes, we had floods as well. As for floods, I think to some extent we had a fair idea that but not the severity of what we saw.
I'm not sure we estimated in our budget that we spend so much on.
Yes. So other factors have come in. So the mid-year budget also makes way for government to lay a supplementary budget to cushion itself against what it has already laid in Parliament, right? So that's what happened. Thankfully, this year's budget, mid-year budget, didn't come with a supplementary one. And so,
in fact, we'll go to unpack it, but let me find out from maybe your general impression of it. When the minister read the budget, I think the minority called it full of English and promises. I've seen some people on social media describe it as an AI budget. That is not reflective of what is happening. He just sat on AI, put in AI, write something for me to tell Ghanaians, and it gave him some tellers. What generally, before we go into the merits of it, generally, what's your impression? Do you also think that they're full of promises? They are full of English and no and just ordinary promises? And
well, I think I'll start by saying that English is our official language, so definitely it will be read in English. But beyond that, for me, it's still the budget still just showed that stabilization is working. But yes, of course, stabilization is not a destination, right? We will have to leverage or look at stabilization as a foundation to transform our economy. And I think the mid-year budget, in a way, hinted at those things, right? For instance, it is clear that government is apprehensive of what is happening in the Middle East and the likes. I think what we've seen in previous years, government like would have requested for a supplementary budget or to increase its expenditure or borrowing targets, right? But we didn't see that. So in a way, for me, it re-echoes the fact that this government has its hands tight on the stabilization agenda, right? So that was it for me with key indicators which I was looking at largely on target, okay, for the year. So basically, for me, 100% expectation, no, but it's largely on track. If I can put it that way, yeah.
Right, I think so. In fact, the minister also indicated that he has exceeded even his targets.
Yes.
I mean, what he anticipated, he's gone beyond it.
Yes.
Now, maybe let's start by looking at some of the general areas. And I think initially you had mentioned the fact that the good thing this budget came with that he didn't come for
additional.
Yes, and he's staying within the old appropriation bill. Tell us, what do you think that means for us? I mean, is it the norm that at every point in time the minister must come for some additional amounts because he did not anticipate anything? And you rightfully mentioned that there's so many things that the minister did not anticipate at the time he presented a budget somewhere last year in November or December. But he still stayed within the budget and he says he's not coming for extra money. What does that mean for us?
I think, yes, it means, one, that we still have our hands tight on the stabilization agenda, and then government is really keen on stabilizing our economy, right? Also, from an investor perspective, it reinforces government fiscal discipline. Okay, let me put this into perspective. The amount that was anticipated to release to the flood victims were around 350 million, although it's yet to be released because I hear there's a Ghana share issue with the funds from which that amount is meant to be released, right? Even beyond that, the GAMRAP, right, about 5 billion going in there. Government didn't seek for new funds to.
I'm sorry, if you can, for purpose of our listeners, if you can tell what GAMRAP is.
Ghana Accelerated Ghana Accelerated Reserve. GANRAP. Ghana National Accelerated Reserve Accumulation Program.
If I can tell generally what it
does.
So
generally, one, it is looking at reaccumulating our reserves so that by the end of 2028, Ghana will have a 15-month import cover, right? We currently have our import cover around 5, right? And generally, we've balanced it around 3 months of import cover, and we saw the impact from the Russia-Ukraine war. So this government sat and said, no, we will have to have like a framework that will really help us or cushion us against such occurrences. And to this government, they thought that it would be wise if we have about 15 months of import cover. That's over a year and like a quarter, right? So that will help. So that's what is generally seeking to achieve for us as a people. That will also help our currency significantly because, and that means that the speculations on the currency will be reduced significantly. So that's what it seeks to do. It's been the minister noted how we have reprioritized certain expenditures to cover for that instead of coming in with a new request for funds to set such or run such policy. You get it? So I think all these point to government hands-on on the fiscal discipline trajectory.
Right. So you think that the fiscal discipline, I mean, the fiscal discipline plays a huge role.
Yes.
In why the minister would, even with all of these pressures, he's still not seeking a supplementary amount.
Because this one of the ministers that has really hinted on the fact that we can make things work for ourselves, and this one of the ministers, he's really this government has really noted the fact that we'll need to cut wasteful expenditure. So I think it keeps doing that, right? So that even if it needs money for something, it's looking within its budget to see what can I cut in order to meet the needs of another necessary expenditure line. So I think literally that was it.
Right. I've been joined in studio by Mr. John Che, who I'm told was formerly an academic, but now has decided to join industry and make more money. He's now a financial analyst. Mr. Che, you're welcome.
Thank you so much.
All right. So, I mean, we're having a conversation about whether Ghana's economic recovery is still on course. I asked Mark Jordan a question before you came. Maybe let me ask you the same question. What's your general impression of the media budgeters? Some have described it as an AI budget. Some have described it as just full of promises. There's nothing substantial in it. What are your general impressions before we go and unpack it?
Yes, thank you very much. I think after listening to the finance minister, I was very impressed, with the numbers. And I think if you even look at everything critically, you realize that the government is on course. In fact, everything is working to the extent that if you even look at the revenue numbers and expenditure numbers, you realize that looking at from January to June, we are seeing revenue just, missing a target by, let's say, 3%. But if you look at the expenditure side, I think if you look at how, they are managing expenditure, I think they are far below budget, which means that, we are cutting our clothes according to our size, and I love that. But the point I want to make is that if you go back to 2018, in 2017, you realize that Ghana was on the same trajectory. In fact, in terms of the growth numbers that were announced, even 2018 was higher when the finance minister was presenting the media.
And 2017 and 2018 was also within an IMF. We're just exiting an IMF program.
Exactly the point. That's what the point I want to make. That most often when we see new government, especially in their first 2 years, we see them doing very, very well. And I want to say that the current performance is not really far away from what we did in 2018 and 2017. Okay. In fact, in 2018, you realize that the city was also has stabilized to a point where even up from January to June, we had only witnessed 4.6 depreciation of the city. Look, 2017, there was stability and everything. So personally, I'm not really impressed as far as the first 2 years is concerned. It always happens because new government must prove that they are capable. What we are watching for is that going forward, especially 2027 and 2028. That is where I can really mark the government to say that in terms of stability and everything, we are on course. You see, you came to meet an economy that was in coma, right? So by all means, we want to prove that you are better than the previous manager. So in terms of expenditure cut and everything, all your other ministers, everybody will understand at this moment. If you look at how he's cutting expenditure, the ministries and everybody, because it's getting them some results, everybody is happy. But some ministries are complaining that they are not getting their funds to do what they need to do. For now, they will not complain, but how long can you keep on? Especially when it's getting 2027, election year is coming, and now everybody is putting pressure on you that I need to perform, because if
there's a lot of government spending in that.
Exactly. In that case, that is where we can really judge the finance minister to say that he is very disciplined. But I feel the trajectory that we are walking, the good thing is that there are some policies.
But beyond the IMF, don't you think that he has put in a lot of disciplinary measures in place which he's benefiting from those measures?
Yes, he has. But as I was trying to compare to what happened in 2017, 2018, they were saying things that the current finance minister, Ken Ofori-Atta, at that time also did. If you look at even the 2018 mid-year budget, there were also a lot of achievement in terms of cutting expenditure, and I mean, we're all happy, and I'm sure you saw the growth in that period to the extent that, I mean, everybody was happy. Inflation was down. We got to the single numbers for the first time, and a whole lot of things. So, as I said, the good thing is that it looks like there are specific initiatives that have been put in place to ensure long-term sustainability. But I'm focusing on the pressures that will start coming and how he can continue to sustain this path that, I mean, he is moving us. And I think if we continue to be very disciplined in this way, he is able to withstand the pressures during 2017, 2027, 2028. Okay, I'm sure, I mean, it will be good for us as a country. I think I've explained that, I mean, we have achieved stability. We need to move to growth. And it is important that, I mean, we continue in this path. Just that get to a point where we have to spend more in order to engineer the growth. You can't continually focus on the expenditure side. Do you get it? You must. But so you're looking at, I mean, his growth numbers too. It looks like even the non-oil sector.
In fact, I was going to come there when you mentioned the growth, that it looks like, I mean, typically our GDP has been heavily dependent on our oil products.
Yes.
But then now from this budget, we see that there's been non-oil growth of about 6.3%.
Exactly. And even if you look at the oil sector, you realize that even the growth reduced. But the major issue is that you see agriculture and service really doing well, but the industry is still lagging. And that is where I feel the government must really pay attention, okay, especially the industry side. Okay, it looks like the industry declined by about 2.3%, and I think was driven by the oil sector, which is seeing significant decline. It's picking up in 2026, hoping that maybe it will continue. Okay, but I mean, we need to also really focus on the industry,
right?
Because as for service, as for agriculture, I mean, they are doing well, but as I said, it's not really driven by oil, so it's good. Okay,
but do you think agriculture is doing that well? I mean, maybe the figures are a little positive, but it's doing that well, because we've had so many conversations about how. And in fact, the agri minister, I mean, in fact, this government, I mean, when it came to power, some of their heavy flagship programs were in agriculture and how we can make ourselves agriculturally independent. And in fact, I think last week or so, the president even made a very bold declaration that in 4 months' time, we're not going to be importing tomatoes. So all of these point to a heavy direction in agriculture. Now, from where you sit, as you mentioned agriculture, do you think we are doing that well?
You see, the agriculture, we have different dimensions.
Okay.
It looks like maybe we are focused on just one area. Maybe, for example, crops, and then maybe cocoa, which is trying to pick up. Okay, so I think we need to do more. Especially, you know, I was listening to the minister about the poultry thing. We wanted to become independent, not importing. But I think he mentioned that people have started chewing there. And that was very unfortunate comment. I mean, because I think there's a target for that, and we need to, you see, we need to be very specific to areas we want to see serious improvement. Like we need to target them, and wherever we have comparative advantage, we need to really focus on that and make sure we are providing the necessary funds to help them grow. And that's the only way. So, for example, tomato, as you mentioned, I mean, we are hoping that it's materialized. Okay, but there are also other areas.
4 months, we're actually tracking it.
Yes, and it's important we track it. And I think we need to also make the the agriculture minister more accountable. I mean, to tell us, because I've not been really hearing a lot of updates from his ministry in terms of maybe what they are doing.
But they had a lot of promises for us.
Exactly. Because, I mean, we want agriculture. I mean, Ghana, agriculture is everything to us. Okay, so we want it to lead the growth. I mean, personally, I'm not enthused by the service sector driving the growth, because mostly, you know, if you look at the service sector, what is driving the growth is the communication and technology. Right? But, I mean, we have to really, because mostly you see the service sector in such a way that most of them are highly foreign owned.
Exactly.
Do you get it? These IT companies, most of them are foreign owned. So if you don't, I mean, focus on where.
But I'm sure that which will hit the ordinary Ghanaian the most will not. It's not going to be the service sector.
That's the point I'm making.
Because at the end of the day, in fact, this is by a lot of people who are doing naysay about it. What they are saying, after all you have said these figures, how about my pocket? How about the food I buy? When I go on the market, the yam I'm buying, I don't see any change. Yet you are telling me that figures have been reduced.
Exactly, because where we will have the direct impact will be more on industry and agriculture. That's where a lot of and you know, if you look at even the employment in the agriculture space, you see that it's massive, and the industry is lacking. So I don't think we should be too happy about, I mean, the service sector seeing a massive growth. We should also, I mean, prioritize the especially industrialization. I'm not seeing a lot from the government side as far as support for industry is concerned in this current, I mean, regime.
Right.
I think they are focusing more on the oil, gold. But I think, I mean, the previous government had a program they were embarking on. We see a lot of companies coming up. I think we need to, I mean, find a way to balance and go into sex space. I saw food processing companies, I mean, emerging ceramics, a whole lot of, we need to go back and grow that sector. It will help us.
All right, let me turn to Mark Jordan. Now let's look at interest rates and inflation. From this budget, it looks like there's been a reduction. I think inflation has been reduced to 5.3% by as of June. And I think the interest rate has come to the 20-something percent. 15% even, okay. Now, what do you make of it from this budget? Do you still think it's also a positive, or are you, from John's perspective, to say that, I mean, at the end of the day, if it's not affecting the real industry, it's not something we must celebrate?
Okay, thank you for that question. I think that's very insightful. To a large extent, I would say that yes, what was read in the media budget reflects situations on ground, right? And I think sometimes when we try to do the math in terms of how it reflects in our pocket, we in a way, I think straight off we're looking at how income actually just increases in our pockets, right? But sometimes you have to look at it from a perspective of how your expenditure movement has really slowed. And I think that's what has happened currently, right? So about 2 years ago, a business would borrow, right, from the bank at least 25, because government treasury bills, which was a comfortable investment avenue or comfortable asset for banks, right, was selling around 23, 24, right? And then if the bank wants to lend to you, you need to really give them a premium on that.
Yeah.
So for me, looking at it from that side, you realize that yes, you're looking at significant cost savings for households and businesses. And I think our businesses and households taking advantage of that. Yes, you check it from the summary of economic data, you see the robust growth in private credit, right? I think year on year we've done over 30%, okay, in terms of private credit. Even when you take selected banks, right? For instance, GCB, year on year GCB has added over 2 billion in terms of credits. What I'm stating is, I think even on a low side, because a firm like Cowbank, okay, right? Cowbank had its credit books little over 1 billion a year ago. As I speak to us, as they reported their half-year numbers, we are looking at a credit book nearing 2 billion. Okay, so when the argument comes up in terms of the translation, I think it depends on where you sit, right, and how you're able to make the case. So for me, in terms of the interest rate, I think it's been quite beneficial.
Okay.
The boom we are seeing in the stock market, right, is also coming from the interest rate and then the inflation dynamics. Because when you are valuing an equity asset, right, we have something called like a risk-free rate. And it comes from the interest rates that the government is willing to pay on its securities, right? And so a considerable decline in that rate also helps valuation in the equity market. And I think we've all seen the boom in the equity market from I think about 2 years ago, right? So and it's funny, right? Activity in that market as I speak to you, I've had considerable involvement from household and retail investors lately, right? Because I now have like my friends can call you, you know, I have 10,000, I want to buy MTN, I want to buy this, I want to buy that on the stock market. Okay. So when I hear the case, right, against the fact that we are not seeing it in our pocket, I think we just cue it to a sector or a group of people in the economy. Okay. We have to all understand that macroeconomic fundamentals will improve and the likes. But it is like rain, right? You have to really position your containers well in order to really benefit from it. Okay. So if you're a business and then you had borrowed at a very high level and you don't have like a smart CFO who will say that, look, rates are down now, let's go to the bank and then go take a loan to refinance this high one so that we now have like debt on our books with very low interest rate. You will miss that, and then you might not be able to really appreciate the fact that macroeconomic fundamentals have improved. Saying this doesn't conclude the fact that there's still much more to be done by the government, because you still have a significant we need to find a way where after businesses have absorbed these gains, they pass it on to customers, right? And it's difficult for us to see that in our market because we do not have really well priced dynamics in our market, right? And all this will make it difficult for households to really benefit from it. For instance, let me make an example. I mean, prior to this war, okay, we had petrol around 10, right? The OMCs are well regulated. That is why their prices really reflect like the actual cost of their underlying input. Okay, I'm not saying we can regulate every product in our market, but then we should find a way. The key ones that are really have impact on household, we should find a way so that their prices truly align with like fundamentals. Okay. If we didn't have OMC well regulated, I bet you some OMCs would have still sold their fuel at very high prices, even though we were benefiting from a considerable drop in the underlying input, which was crude oil prices. Okay, now it has increased. They've also repriced to reflect it. So I would say for me to conclude on this question, I would say that to a large extent, it's reflective of what we are seeing on ground. Talk of inflation as well. Okay, I think is also the understanding that we are attached to inflation that makes it problematic for us. Inflation is not inflation declining doesn't mean price will not increase.
Are going down.
Okay, I don't want us to go into that, but inflation declining simply means prices are increasing, but at that particular rate, a lower rate this time. Okay, and then some bit of inflation is good for economy. That's why even our inflation target is not 0. It is 8 plus or minus 2 percentage points, because some bit of inflation is good for economic growth.
But I've had conversations with people on the show who have suggested that deflation is even good for us. Do you think so?
I don't think so. Maybe for some key sectors, a repricing will cause like some considerable deflation in some key sectors. But on a broader level, I don't think deflation would really help us unless you are looking at us like the Japans, which I don't think
they are almost perpetually in deflation.
Yes, which I don't think we have, like, economy has that muscles to really absorb that. Yeah, looking at the situation where we are not seeing considerable growth, even with the 4.8 and then the 6 in terms of growth rate we are seeing, it is not matching job. So imagine the era of like really lower negative growth, right? Then we'll be running into a whole new challenging economic regime as a people.
It's going to crash our economy.
Yes. So I won't wish for that for us. And then that will mean that we won't even have to do much, right? Because you don't want to grow. You don't need to spend much. You don't need to just do mismanagement and stuff, okay? Right? Especially for us, like Ghana particularly, right? That's not to say that Japan's own is quite strategic, right? It's quite strategic. And I don't think we have the economic muscles to do that at the moment here.
Okay, let me find out from you, John. I mean, also on the interest rate and the inflation, what you think of it?
Yes, I think where we are trending is very good, and looking at the current interest around 15, I think we need to go lower.
But see, especially for these rates, some people have also, especially the opposition, have also said that some of these figures are just fictitious, and that very soon we're going to see the real figures.
No, so you see, there are clear macroeconomic issues that move some of these rates. Let me give a clear example like treasury bill rate, except that maybe the treasury bill rate trending down is going to reverse. But the point is that if treasury bill rate is around 5.7%, clearly it suggests that will also move inflation down. Okay, so the point is, I don't think the current figures are fictitious, they are real. If I take, for example, inflation, as we were even discussing, the number that we see, the 5.3, is the general. In fact, if you look into the inflation numbers, you realize that some products actually fell over 60% and the rest in that same period. And there are also some products that rise by over 40%. Okay, so personally, I advise that if you really want to feel the impact of this economy, you have to look critically at the specifics and budget in such a way that you benefit from that. For example, last month they reported inflation of 5.3. Now there were some items like contomere and the rest that the price were down, let's say by 30%. What do you do as a consumer? You switch to such products. You get it. And the ones that, because they are at the same time, there are also some price of goods and services that have significantly moved up. If you go and buy those products, you may think that whatever they are reporting is fake, because that is not reflecting in the product that you are buying. So for example, if let's say a particular product like ginger has increased by 90%, and you go and buy ginger, maybe as a household you buy ginger 200 cedis, let's say a month, because of that you have 400. When you come and see inflation numbers, they telling you that inflation is 5.3, you may question it, because it looks like your expenditure for ginger has increased by over 100%. So you may not believe in the figures. So normally, as far as the economy is doing well, as my brother said, as far as the economy is doing well, you have to position yourself to benefit from it, especially moving to areas that you can benefit from. For example, there are different banks with different lending rates, and at the end of the year or at the end of the month, the Bank of Ghana provides us updates of the banks with the low rate, high rate, average rate, and the rest. What do you do as a businessman? You target the banks that are offering a very cheap rate. You get it? And as he rightly said, if you have borrowed in the past at a high rate, there are a lot of banks that allow you to refinance by topping up. When you top up, what they do is that, so for example, if you borrow, let's say 100 million, you can go for the same 100 million at this current rate. It reduces your interest cost that you were paying previously. So sometimes when the economy is moving in a particular direction, you have to position yourself to benefit. Otherwise, you hear all these good numbers and you think it's not reflecting in your lending cost, because I've already borrowed in the past and you are paying that agreed rate. Ghana, we don't have the flexible rate regime where once interest rate is moving that. It is now that the banks are trying to do that, especially when they are lending to businesses. So they pledge it at monetary policy rate plus 3. Do you get it? And even currently the monetary policy rate is even higher than the GRR, which means that in the business sense, if you go and borrow, you still borrow high because of the current policy rate. So what I'm trying to say is that when the economy is moving a very positive direction, like what we are seeing now, there's stability by God's grace. I mean, if you look at the cedi has stabilized, and then for the whole year it has depreciated by just 5%. Okay, it makes, I mean, all of us plan very well, do our cash flow projections in a more confident way that, I mean, things are not really going to change much. Now, I went through, I mean, whatever the finance minister said last Friday, you realize that when it comes to even process, we are getting to show up our currency. You realize that most of them is coming from gold. I think about 68% is coming from gold. Cocoa too is now rising up and everything. And it looks like the way that, I mean, they are moving, every target that they have set for themselves, they are going to achieve in this year. Okay, the inflation target, the real GDP, all of them, and because they are even achieving more than what they targeted for. And the good thing is that when you look at even the expenditure side, you realize that they are really managing expenditure. The good thing is that in this current regime, the fiscal side and the monetary side are working in hand. At first, it was only the BOG that targets inflation and tries to use monetary policy rate to tame it. Now, that is not the case. The fiscal side is also doing everything possible to make sure that they don't cause problems for the monetary side. So we are seeing very high cooperation between these two entities.
The fiscal side is from the Ministry.
The Ministry of Finance, and the monetary side is from Bank of Ghana. What I'm seeing is that they are working in tandem. Like, so for example, if like the way fuel price has started rising, the minister is thinking of, no, if it continues rising, inflation picks up and it's going to affect the central bank. So let's come into the picture to help.
I think that's where they came in to take off the 1 cedi per liter tax.
Exactly. And they are willing to do that again. I think when he was presenting, he mentioned that they are willing to do that. So as far as the fiscal, you see, most of the time the difficulty for the monetary side to work is the fiscal side, the Ministry of Finance, especially when they engage in reckless borrowing. They put a lot of pressure on the monetary side to use monetary policy rate, which in effect affects the lending rate to tame inflation. But we are seeing in this current government, the two of them have an objective. They all have
good communication between
and they have the same
sides.
objective that I want to achieve a single digit. You also want to achieve high growth numbers. I can support you with lowering monetary policy rate. So you must also support me taming inflation. So you see the government, in fact, if you look at from January to June, I'm seeing expenditure target declining by about 24% based on the actuals. What does it tell you? And you look at the revenue side, just down by 4%. It gives you an indication that the fiscal side is very disciplined and they don't want to cause any problem for the monetary side, so that the monetary side can continually reduce the policy rate in order to spur private sector growth. And it is happening. So as far as they are willing to work together, okay, I'm sure interest rates will come down to even single number. I was listening to the central bank governor. He mentioned that his target is to bring lending rate to a single number, so that when people go to bank, they can also borrow at a single digit rate, 8%. Now, and we must get there.
Do you foresee it happening soon?
Yes, I think apart from the inflation numbers, I mean, the inflationary pressures building from the war, if the war ends today and there's no more tension, and you see when it happens, fuel price is going to fall drastically. The reason is that now, you know, US is controlling Venezuela, and Venezuela is a third. Like if you look at the oil reserves around the world, they are third. Now US has taken over. So imagine, I mean, the war stopping, the Russia-Ukraine war to stopping. You see how oil price will fall. And once that pressure is over, then we are good to go. Especially now that we are getting a lot of dollars, I mean, from our gold policy. And I don't think at this moment anybody should be scared of exchange rate. As far as gold board is there, the exchange rate is going to be stabilized until maybe they start having problems. But as far as that policy has been set out, exchange, you know, currently the pound, the dollar is rising against major currencies. It's rising against the pound. It's rising against the euros, and rising against most currencies. Just last week, but the cedi is still stable. It's not witnessing that high volatility. You get it. So if you're able to overcome the challenges in the Middle East, and I mean the war stops, trust me, interest rates will actually come down to single numbers.
Intriguing. I guess people who want to borrow money should just hang on a little. Maybe they'll get a single digit soon. But in any case, let's also look at the infrastructure. Let's look at the big push.
Yeah.
Government's flagship. Maybe let me start with Mark Jordan. Again, governments came with a big flagship of big push, but people have raised a lot of issues to contractors not being paid. It looks like it's just a hoax. The minister in his budget statements also indicated that it's on course. He indicates that contractors have been paid, even though, I mean, not all of them have been paid. What do you make of the big push? Do you think that is also on course? Because we have a huge infrastructure deficit, which there are a lot of roads which were put in line. We have seen along some areas some work being done, but generally, what do you think?
I think generally, for me, when I heard about it, I was quite happy because of the multi-dimensional impact, okay, from construction project, right? When you start doing a construction project along a way, you improve access to that route. The real estate guys can come in there, you know, and even to some extent, fast-moving and consumable goods, okay, also improves, okay, because and then, I mean, income levels also improve because I think you can estimate at least 20% of the cost of construction attributed to labor, right? So, and if you are looking at this 20%, I think largely at least 50% will go in the pockets of local guys. Okay, so it's a quite helpful initiative because of its multi-dimensional impact. In terms of how government does its payment to its contractors, I think it would be great to, in order to see this talk about whether it's paying its contractors or not, I think it would be great for us to have like a clear path or a clear understanding or transparency in terms of how the payment is even done in the first way, so that you and I can just sit in the comfort of our homes or wherever we find ourselves to really judge whether government is paying or not. Well, for me, at least from the numbers I have seen, okay, especially from government fiscal operations for the first quarter, right, the allocation to, or when you even look at the half year, since we have the half year budget, let me base it on that. When you look at the half year numbers, right, what governments had expected to pay, right, projection for capital expenditure, I think we are largely on course with it, right? So I don't know where the rhetoric comes from in terms of whether government is paying contractors or not. Maybe when the minister goes to parliament in November, we'll have better color on it. But for now, from the numbers I'm seeing, and I think 87 projects, what's the name? Shortcut for about 87 projects and ongoing. I think these projects are quite helpful projects. Talk of the extension, I think, and also improving the Nsawam-Accra road, right? I think right now the main point is around the Amasaman stretch. Work. I have seen considerable work, and in terms of the numbers as per government fiscal data as well. So I won't have much to say on that end, okay. However, for me, for future sake, right, what I would mention is that the value for money office, right, which has been set up, right, would really look into how these payments are done, okay. I think this is the time for them to look at it, value for money, and look at the quality of even the materials that are going into the big push, because we don't want a situation where a road is commissioned and then later these roads are wiped away, and then we now have to look for space in our budget to fix these roads again.
Yeah.
Right. So that brings us back into this recurring economic cycle of downturns. Right. So for me, that would be it for me on the big push. Yeah.
But then you think that the addition also of the Ghana military, the armed forces, especially on the, I think, Accra, Kumasi Highway, they've been taxed to do some clearing. They said they have done even about 70%, right? Do you think that was a strategic move?
Yes, I think that was quite strategic because, these are our own people, right? And they are willing to help, right? And thankfully, they have the right machineries to also do that. I think we are using the engineers segment of the military.
Yeah.
It's quite helpful. And for me, it reinforces the fact how government is trying to use its resources wisely, right? So I'm looking at a situation where when Jamaica had that issue, we were able to fly our military there to go help them. So if we were doing something, then they can help, and then we didn't really use them, and then we had to go pick up a private person, pay them for monies. I don't think that would have been quite a wise venture. So looking at what has happened now and how we are using the military to do that is quite helpful. I think that the caution in there will be that I hope we are using the people from the right segment so that we don't have lapses from other segments of the military where, let's say, if we need them to be on assignment at very vantage security zones in the country, there might be lapses. I'm sure the Ministry of Defense and then the Ministry of Finance are well coordinating this. So I think it's a great step in its right direction. But I'm hoping that when the actual work is yet to commence, we would look to stepping it up to also invite the private guys to come in there, because definitely we've all come to terms with the fact that to build the right economy, you have to also be cautious in the way you invite the private sector into the public sector space. Yeah.
John, on the big push, and let me find out from, do you think that it will be more expedient as we have started using the military to do some of the clearing work? Do you think it's more expedient that we focus on using local contractors so that whatever spending we're going to spend on that project, that spending will remain in Ghana?
Yes. I think for me, I 100% support local content. For example, I mentioned, I think I had an interview here, I was speaking about the reason that, even though we are having net export, we have experienced positive net export from 2017 up to now, but still our CD is under pressure. The point is that if you are having net export, then what it means is that you should be able to fund all your imports. It's not the case. But I think if you look at the numbers, you realize that it's mostly because of, capital flight, where most of our services, our industries are owned by foreigners, and as a result, when you have to pay them in dollars, and when you are paying them in dollars, you demand for that, and that was worrying our currency. Big Push is a very big project, and I think the good thing is that I think we are not really borrowing for such projects. The minister has, I think I listened to the minister, he said we are using our oil proceeds to do something for this country. That money shouldn't go to any foreign company or investor. It must remain here. Personally, I believe that all the Big Push projects that we are doing, we have engineers here, we have contractors here who can do the job. We have a lot of companies here who are capable, and now we must believe in them and push all the money to them, so that at the end of the day we don't pay in dollars and put pressure on our currency. So it is important we use local contractors. It is important, and the good thing is that we are even using our military, which means that it's even going to cost us less. And the issue about the minister not paying for the projects and the rest, I think the minister made it clear to us that once you bring your your assessment and you tell us where you have reached, they pay. And at this and I want to say this time, there's no arrears. Nobody has come giving them assessment and they have not paid. Maybe what we need to question, where those people questioning, oh, the government is not paying contractors, government is not paying contractors. It's possible that maybe in the past we were paying contractors for no work done. So once we give the contract, we just pay them, whether the contract will be done or not. We were not following it. But this minister says, no, for me to pay you, I must see the work you have done and the stage of completion before we make any commitment to you. And I think that is a very good thing, that we have to all support the minister. We were here when the Minister of Roads and Highway were moving around, and there were contractors that he even said he has paid them. But looking at the work that has been done, there's nothing to show for it. And he was even threatening to take the work from them. If the minister is saying that, for me, I'll make payment when you have shown proof of work, what is wrong with that? And as far as he says, up to June, there's no outstanding debt in terms of what he has received. I think, that, I don't know, maybe they have contrary, those who are, saying he's not paying. I feel he's being more prudent and making sure that wherever he pays our tax money, that money is being used well.
The work could be done.
Exactly.
You don't have people take their money and they stop working.
No. He wants to make sure that this is the work that has been delivered, and then I'm paying.
But I think recently there was a video which surfaced which showed, is it the Minister of Roads and Highways? I think he visited one of the areas.
Yes.
The people are taking money, but there was nothing to show for us. They're not even going to work.
Exactly, which means that maybe the Ministry of Finance should look at the assessments again that they have been paying for. Because it's possible that assessments have been coming and the work has not been done. But for them, they wait for reports from the Ministry of Roads and Highways. So maybe they need to also do more to help. The Ministry of Finance to do their work.
What I'll also add on that end is that because of, I think they are trying to make sure that they pay, like there's value for money and all those that. So that is in a way slowing the way cash flow moves from the Ministry of Finance to, or the ministry to the contractors. So maybe I think on the other hand, the contractors should also beef up work and then delivery, and then we can really judge well what's happening. But I think currently from the numbers, the significant drop in expenditure compared to targets, one of the segments of expenditures that is actually fueling that is actually capital expenditure. Because as of half year, targets are around 36 billion in terms of capital expenditure. But then government has just done about 21. When you check the difference, you are talking about nearly 15 billion in terms of target versus actuals, right? And it becomes worrying because when it comes to capital expenditure, unless government wants to make it clear to us that maybe they had really overpriced certain projects, or they had anticipated that the price was going to be high. So, after they did everything, they realized that it was slow. Because sometimes, let us remember that it is not always that the difference between your target and then your actuals is because you are not actually doing it. Because your targets are actually estimations, right? So sometimes you might have overly estimated it, and I'm guessing that might have been the situation. That is why they're able to reprioritize the capital expenditure from foreign related capex into the GAMRAP, right? So that's about 3 billion, right? So I'm thinking that could have been the narrative around it, right? So I'm hoping that by Q3, by the time we see like fiscal data for Q3, the capital expenditure side would have considerably improved, because the cut in expenditure is highly from the capital expenditure side, and I think that's not like all the best. Yeah,
absolutely. We're going to take a very short break here. When we come back, we're going to looking at some further key areas like tax and infrastructure in terms of public transport. we've seen from the budget that the minister is willing to allocate about 400 million, I think Ghana cedis, to the acquisition of buses. But the issue is that the old buses, what has happened to them? What is our maintenance culture like? We'll come back and look at. There's still the focus on Z11.9 FM, your lifestyle, leisure, and business platform. We'll take a very short break here. When we come back, the focus rolls. Do not go away. Z101. money situation in the country can be better. It's still the focus on Z101.9 FM. You can still send in your contributions, your questions to our WhatsApp line 0544-321019, 0544-321019. And we've been having a conversation about whether our economic recovery trajectory is still going well. Now we're turning attention to taxes, and it looks like the finance minister, in fact, before this budget, again, there were concerns about the abolishment of the taxes previously, whether we're going to be going to realize the revenue were previously realized. And then it looks like, from what the minister says, even on the tax front, we have been able to realize a lot more money. But he identified some leakages, especially for VAT charging entities who will charge the money and they'll pocket it. And now the minister is proposing that we are bringing in some AI tools and some digital ways of collecting the money, so that I think the money goes directly to the GRA, so that some of these leakages will be reduced. Again, gentlemen, let me hear your thought on it. Let me start with John.
Yes, I think if you look at the revenue side, you realize that, the minister is doing something right. When the nuisance taxes were abolished, everybody was very concerned. People were saying we are going to lose a lot of money, a whole lot of things. But looking at the numbers, you realize that, we have exceeded target. In fact, what led to the we not meeting our revenue target was oil sector, where production has declined significantly. Okay, if you take that one out, you realize that you're on course. And looking at VAT, you see, if you look at even the oil marketing companies, the oil sector, there's a way that force people to pay their taxes, before they can even load their products, and as a result, there's no way you can default. And I think we have, the minister mentioned one AI that is being used at the port and is significantly helping, increasing our tax revenue. If that same technology can also be used to ensure that as far as you're a VAT registered company, and I think it should be easy for government to even track VAT registered companies and making sure they make their payments. Maybe there should be a way where, because SNET is able to call you as a company that you have not paid your SNET, and therefore you are supposed to pay. How do they do that? Yeah. So if you have a world VAT system where every registered VAT is in that system, and we can clearly know that you are filed by 15th, you are supposed to file your VAT. If you have not, the system will show. The agency responsible just need to check up to make sure that you pay. So there should be.
But shouldn't government also be concerned about prosecuting them, because these are also criminal offenses?
Yes. But you see, as for I feel like prosecution is even costly.
They'll spend money to prosecute them.
Yes, it's costly, and mostly it worries businesses and a whole lot of things. So I don't think that should be a solution. That's why I'm saying, there are some, especially I was even giving the oil sector as an example. If you have not paid your taxes, you can't even load the products from the depot. Okay. They have a system to ensure that you have to pay your taxes before you can load.
And the digital system they use to check
it's a digital system, and there's no way you can default. In fact, if you default, there's no way you can load your product from the depot. It can never happen. So every time you have to pay your taxes
mandatorily.
Exactly, before you are allowed to load. So the same thing, we can use a particular technology. That's why I said we know all VAT registered companies. We put them in it. And as I was even giving an example, SNET has a way of tracking all employers, whether they have paid their SNET or not. Yeah. Because I think last week, I got, today is 15th, we have not seen how did they know that. Because they have a efficient system to track and to monitor and to ensure that everybody comply with the law. The same thing can be done with the VAT. We have all the VAT registered companies in that particular technology, where if by 15th you have not paid, the agency responsible can call you, and if you decide not to, they can visit your premise and make sure you do so. If not, the necessary sanctions can be applied, and that will convince every business that you can't joke with VAT. Okay, so clearly I think there's a way. As far as they're even using AI technology to help with import, making sure everybody pay the necessary, the same thing can be done with the VAT system.
Right, Mark Jordan. I mean, tell us how, even though government abolished a lot of taxes initially, we'll still be able to make a lot of progress. Even still, with some of these defaults we're still
Yeah.
facing,
So-
they've made lots of progress.
I think one of the things that we've heard from the media or, scrutinizing the budget is the fact that the government has missed its revenue target for the first half of the year. I think it will be helpful to put it into better context, and the fact that you are looking at nearly 1.2 billion missed target, right?
Yeah.
When you do the drilling down or going behind this 1.2 billion, you realize that our domestic tax revenue actually outpaced target, right? And I think that's a notable thing, because after abolishing COVID-19 levy and then also e-levy, right,
Yeah.
together with betting tax and other tax handles, right, the expectations for all of us, or personally my concern was, how were you then going to meet your tax revenue, right? And so for me, I was expecting a miss by not by a 1 billion miss is still within range, right?
Yeah.
And then when you check one of the drivers behind it, it is partly far away from like taxes, right?
It's the oil.
Right. That means government, what government said about the taxes, the fact that they would still be able to meet it, even taking away these handles, was to some extent they've been able to achieve it, right? My concern that I'm having now, right, is how we still missed our oil receipt from revenue from oil and gas receipt, right, by 2.8 billion, right? Because I think if you take out January and February, okay, because the war started in at latest 28 February,
Yeah.
the war was in session. So if you take out January and February, by the first week of March, oil prices had crossed $90 per barrel, right? So I could say comfortably that between March and now, oil prices on average have been even significantly above government estimate for the year, okay? Because when you check the budget reading for November and do the math well, you see that on average, government's expectation for crude oil prices the expectation would have been that crude oil prices will still range between the 70 and 80 range, right? Or give or take around the 75% per barrel, right? Now, if you take out January and February, on average, we have had crude oil prices trade in the 80 to 90 range, even though we've tested the above 100 per barrel territories, right? It receded. My concern is how we're still able to miss. I was expecting that would have been the handle where we actually make significant gains, because your receipts are in a way pegged around crude oil prices, and then those prices have increased. So if we weren't able to capture those gains, then it becomes quite worrying, and then that raises an alarm, right, of the fact that we really have to consciously work at revamping the oil and gas space, right? Consciously attract investment into that space, okay? Because I think my brother mentioned that one of and I think it's true. One of the reasons why we weren't able to meet is that our production levels have considerably not met like performance in recent years, okay? So this is the results we are seeing. Oil prices have increased, but we've missed our oil and gas and receipts. So I think for me, when I disaggregate the revenue numbers, these are the insights and the pictures I'm able to pick up. And I hope that in the next half of the year, government to consciously make an effort towards that. If not in the next half of the year, I will expect something be done against it, because it's clearly it's become a challenge, right? Government will work at it in the 2027 budget, if not half year. Yeah.
Right. I mean, in this budget, the government did not give us an estimation of how much these digital tools are going to draw in. But do you think the figures are going to significance? Anyone?
So I think maybe we can draw insight from the Republic AI system, which has been able to, I think per report, we've been able to shore up monthly custom gains from on average 4 billion to 5.3 to 5.5 billion. I think give or take, you are looking at about 1.2 or 1.3 billion added at least on a monthly basis.
So a monthly basis of 1.3 billion.
Yes. So if you look at it from that perspective, right, what we've been able to gain from this Republican AI system, it could give indication. And then I think from the minister's statement in Parliament, he noted the fact that by the end of April, they had ended the pilot stage of the new system that they were looking at, right? And it was quite positive for them. So I'll just be optimistic, right, at this point, and say that looking at what has been achieved with the AI system, and then how positive the pilot stage has been for the rolling out of the new system that we are looking at, I'll just like to be optimistic that the new system will also be able to help us, bring in more revenues for the government.
Okay. Now let's look at public debt, and maybe this time I'll turn to John. It looks like from the minister's report also, the public debt is being managed well. I think he spoke of the issuance of some domestic bonds and all that. Do you think that into the foreseeable future also, the public debt is still going to be attractive to our investors to still remain or to still bring in in investments into the country?
Okay, great question. But before I go into the debts, I want to make one comment. I wanted to give you the number concerning how oil production has fallen over the years. And it's very significant. When I saw the number, I was very scared. So how come our oil production has significantly moved down like that? And I think the minister mentioned that since 2017, we failed to do any massive investment in that sector. And that is why it is declining. But I think they have taken steps to revive it, and they are now attracting a lot of investment into that space. So I'm sure maybe the growth trajectory will reverse. It's significant. I think it reduced even over more than 60%. That is why, despite the increase in prices, we didn't see that with the oil. Co-production was very down. And let's go to public debt. I think when it comes to public debt, we have really managed it well. Can you imagine that our debt levels is still below 2024 figure? That's very significant. We have never seen that before. If you look at Ghana debt trajectory, you realize that has always been increasing. In fact, from 2009 to up till 2024, we only saw upward movement. And I think when this government came, I was thinking, it's even going to go up more. But the good thing is that 2025, our debt levels actually reduced from 2024 figure to 2025. So I think in 2024, our debt levels are around 650 million Ghana cedis, but it's billion Ghana cedis. But it fell to 645 and has risen back to 716. So it gives you an idea that the debt level, our debt management is very on course.
Right.
And I think one of the benefits we are getting is the cedi stability. The cedi stability also really helps us. So it's not like Ghana government is not borrowing; they are borrowing. But the point is that because the cedi also appreciated, it reduced our debt level. So you see where the gold board, thing comes in. because has been able to reduce, and the good thing is that they are also able to reduce, interest payments related to government bonds for the rate to move down from about 20% to 6%, 8%. Even the 2-year bond is just about 12%. So on that front, it's been managed well. And looking at even the way we are now borrowing, we are not going the external way. Yeah. And people are really interested. Despite, you look at it, despite even the rates coming down to, let's say, 6% on 91-day treasury bill, government is still attracting, a lot of, even though they have not been meeting their target, but they have been attracting a lot of funds, from the public, which means that, there's a lot of confidence in this current economic managers that they are doing things right. They are doing fact, and I think our debt management is very on course. I don't think there's cause to worry. For a minister to say that even what I'm going to pay next year, I've started saving towards it. That is a very bold step. Despite the many expenditures, he's still thinking of meeting my public debt obligations. And that sent a lot of, confidence to everybody that I can comfortably invest in government securities, and there's nothing to worry about. Whatever happened in 2023 for government to default, this government has taken that bold step that I have created, a fund to put, sinking fund to put the money into, so that once but I can even pay in advance. And he has been doing that. He has been paying a lot of debt in advance to send a very positive signal to the market. And if you look at our debt grading, you realize that everywhere we are moving in the positive direction. IMF has moved us into a positive trajectory, and even added sustainable and can absorb shocks. So it's clearly, and you see the good thing is that, as for foreign investors, they are always skeptical about developing economies. But after we ended our extended facility to IMF, we are saying that we are not going to be independent. We still want to be under your care. We still want you to come and pass your judgment.
I think they rolled out, is it a 36-month or so?
Yes, and that is very bold step to say that I don't need your money, but I still want you to come and manage everything. So
even they are putting their own selves under that discipline check.
So it clearly tells you that you see one thing about public finance and national economies is more of perception than even reality. I can give you a lot of it. There are some countries that are doing so well, but the perception around that country is not allowing them to get the needed funds to develop. Do you get it? But this minister is strategically positioning Ghana as a country you can trust, to the extent that he is saying that we know that we have developing economies have history of mismanagement without IMF support and anything. We are out of IMF, but we still want them to support us. And that is why you are not seeing a lot of capital flight happening. Foreign investors are very confident in the economy. They know it's going to be managed well. So I believe, the minister is doing everything right. I think we need to encourage him, we need to motivate him, we need to support him. Because at the end of the day, no matter the politics, our pockets and households will suffer. So once they're doing something right, we have to support them.
Right.
So what I'll add, or my take on the debt side, would be that, when you look at it from debt to GDP numbers, it looks good, right? We ended 2025 with a debt to GDP of 45%. As of half year, our debt to GDP is still 45%. So to the layman, it is understood that our debts are well managed, and then we are on a good trajectory. Yes, because 45% also is far advanced of time, right? Because we have a framework that has a fiscal council framework that I think by 28 we'll have our debt to GDP at below 50%, and we are currently at 45%. That's quite advanced in time. That is positive, but I think it will be helpful to also drill down these numbers, right? And the other positive is that government has been committed in paying, right? And I see them do early payments, which is quite helpful and improves investor sentiment. So these are key stuff that government has done. And for me also, the sinking fund, because it's especially for me playing in the capital market and interacting with fund managers every day is a big question, right? So seeing that we have about 15 billion, okay, in sinking fund, right, ahead of February maturities, which are pegged around 30 billion thereabout, is quite helpful. And I like the strategy around it. I think we are doing 7% of domestic revenue.
Yeah.
But you see, the problem or the issue for me is that when you do the math, 7% of even our full year target will not give you that 30 billion. You will be around 18 or 20, give or take 20 billion when you do the math, 7% of for full year, right? So I'm still wondering where the additional 10 billion will come from, right? I mean, we still have the treasury bill market where the government can build buffers from there. But for me, it's still a concern. How do we meet the 30 billion target? Beyond that, right, it's also like our debt numbers actually. You mentioned the fact that we have been below levels since we are still below the 24 levels. But I think it will be helpful, right, to add the fact that we declined considerably in 25 because of the external debt component, which declined by over 100 billion, given the 40% appreciation in our currency, right? Now, I'm quite concerned with our debt because debt to GDP, in a way, you don't pay your debt with GDP, right? And especially for us in a country where even tax to GDP, we are still below average levels in Africa, right? For me, debt to GDP alone is usually not a comfortable metric. One of the comfortable metrics I look at is the accumulation in terms of even domestic, domestic debt component, right? And for me, the accumulation in half year is quite alarming, because half year alone we have accumulated debt 2 times of the debts that were accumulated in 2025 for domestic, right? So domestic debts we accumulated over or slightly above 25 billion in terms of domestic debt in 2020. It is assumed that the domestic debt is usually devoid of the exchange rate component, right? Now, 25 billion. For the first half of 2026, we've done 58 billion. It is alarming but it's still dependent on certain caveat, which I'll explain. It's alarming because the whole year we are looking at financing, sourcing domestic financing of around that similar amount, around 50 billion. So if we don't do aggressive mobilization in terms of domestic funds in debt in the second half of the year, then we may be ending on a fairly positive trajectory, right? However, if we go aggressive in the second half, then I think debt-wise, accumulation might even triple what we did for 2025. Okay, so it's a caution that for me I would like to note. Okay, and given our currency situation right now, I do not expect. I expect that the external debt component will also see some increase even into the second half of the year, given our currency trajectory right now. So, but at the end of the day, we'll still end debt to GDP on a fairly lower level. And I think that also comes from another perspective, and is the fact that our GDP, the base, right? The base itself has increased. So, and the increase has been more than the debt itself, right? So then when you do the math in terms of GDP, debt to GDP, you still have it low. So for me, I always raise this caution because we make mention of the 2017-2018 case. experts were noting when we're doing the borrowing.
Yeah.
One of our case was that debt to GDP wise,
Yeah.
it is still safe.
It's true.
Forgetting that you will not pay your debt with your GDP, right? So for me, debt to GDP looks good, but the accumulation raises some alarm, and I think we have to be cautious as a people, and then look at it going forward. Yeah.
Right. Now, maybe we're about wrapping up very soon. Let's look at maybe the last area of public transport. I mean, we are planning on spending 400 million Ghana cedis on public transport. But even if we buy it, what happens? Because it looks like the buses today, they're on the road. Next day, they are not on the road. They say there's something spots. Nothing happens. We have to get a new bus. What's our maintenance culture like, John Che?
In my view, looking at our history, sometimes I feel certain spaces need to be supported. Especially, we just need to support the private sector to get it right. Except maybe STC started doing well, in the previous government. I've not really seen the current trend.
Their buses even were, in the previous, they got some very good buses, comfortable ones.
Exactly.
But again, as you say, I'm not too sure what's the state of it now.
As for because it's been long, I heard any conversation around that. Okay, maybe I don't know the model that they were using. If personally, I don't trust. Government is a whole lot of stuff. So normally, we just need to. I feel even if we procure the buses, it's not possible for us to lease it to a private sector to manage them. That's something that I've been thinking through. I spent about 400 million. We have spent such monies before. Some of these buses were left to rot. We were all here, yellow buses. But it was our taxpayers' money that they used to buy.
They were later sold for 2,500.
Look at all this. So personally, in terms of the public transport space, I think the government role should be more of regulation and support. Even if you go and procure the buses, I think we should lease it. We can lease it to the private sector, and then they'll be paying some dividends to government.
But even if we allow private sector even take the lead, they still have the capital.
Yes.
To do
So
that.
I'm even assuming maybe they think they don't have the capital, so they want to, and maybe are having a lot of challenges with our public transport, so they want to even come in directly. You can procure it and lease it to the private sector and give it a number of years to pay back. Then that would be more prudent use of our money
than for
government taking the lead and poor maintenance culture, a whole lot of things. Government buses, nobody cares about.
I presuppose that if the private sector does it, they are concerned about their money.
Yes, because they have put money. Assume they are paying lease. You think they will run the thing to?
VIP buses have been in business ever since. They won't. But even think of it, can't we then even government can have an agreement with VIP or any of the others and say that now instead of your should I say, is it inter-regional travel? Let's do intra-region.
You said do intra.
So now you have VIP bus that move from, let's say, Medina to Accra.
That's the point. I think we can do that. It's easy for us to do that. You get it? Because VIP has a track record. Even if not VIP, other
any of the other
companies can take over. Because, we have done some before it didn't work. Metromass, do you know the state of Metromass today? You go into Metromass books and a lot of debt to be paid. Do you get it? Because people will come and accumulate debt and leave. Because it's government. Another government comes and you have to fix. You can't fix. You leave it like that. You get it. So personally, I don't think it's a government job to go into that. If you want to improve public transport, support the private sector. Whether in terms of if they don't have the money, procure the buses for them and lease it to them. And that one they know they have to pay, so they will manage it well. Okay, so that's my thought about that.
Yeah, I think that if government, they have a good arrangement, maybe a public-private sector arrangement with on public transport, even a lot of congestion problems reduced.
Exactly.
I'll be comfortable parking my car to sit in any of these comfy Ayalulu buses. If I sit in a trotro, my leg won't fit in.
Exactly. So imagine VIPs are moving around Medina. Everybody will be comfortable to take this.
No, even the Ayalulu, people I think happy to pick it, but it's just that I think there are not many, so I'm not
see
too
a lot of people standing
in it, and I'm not too sure how. I don't think it runs 24/7, does it?
No.
I think just fixed time. So then you have
I know sometimes I wonder why government is not going to such arrangement, because you get money.
Yeah.
You get the money back.
Yeah.
Whatever, like the way we waste a lot of money in a lot of projects as we don't get any returns. As for public transport, you get money.
Every day people are
Every
using
country
it.
is doing it.
Yeah.
If you go to Europe, they have public transport working effective, and government is
Yeah.
making so much from it. Why can't
Yeah.
we do that? That one can even help us control inflation. When oil prices are going up like that, you bring your buses, reduce the rate for consumers. Then we
Yeah.
all benefit from that. So it's an investment that you get returns. STC was very profitable. If you look at the 2023, 2024, they were very profitable, doing everything right. So I think we should. I don't know the model that. I don't know if it's because of the management or whoever was leading the charge, who was very efficient. And personally, I think sometimes you see the public speaks and we have efficient managers. So most often the problem is more about political interference and the rest. Government, you set targets for them. Even if you want to go by the government's way, you set like the way now SOEs are not left to do whatever they want. There are targets for them. If you want to buy anything or procure, you have to pass through the same commitment process. I think we can do the same. Even if you want to go the public way, you get it, to make it more efficient. Because the reason I'm saying we can do it even publicly is because STC has proven that if you have efficient managers at that front, things will go well. GNPC is owned by, it's a public, but we see some positives coming from there. So I think we can do it. But I am supporting more of a private sector led, where government support and regulate. That would be the best way to go.
The public transport industry. Maybe let me take your final thoughts on it, Mike Jordan.
Well, I think what John mentioned is very important. 400 million Ghana cedis is significant money, and so I will have to cautiously manage that well, right? And for me, I ask myself very key things, right? Even away from government as a people, right? Why do we pride ourselves in duplicating policies, and then we have something there? Why don't we look at the challenges, try and solve it, and then move ahead? I think we always want to come up with something new, and sometimes it's not by no fault of the politician. I think for us as a people, that's what we also want, because I tell people every day that, look, you think that a particular politician doesn't know what exactly should be an importance to a country. He knows, but it's because of how the people in that country have situated their preference and what we look out for in casting our votes, and so it makes these duplications come in. So it's quite dicey on that front. I don't trust that we'll be able to manage it well from what we've seen in the past. Okay, so like John, I think John mentioned, maybe we should be looking at other see how we rope in the private sector in order to manage the buses that we acquire.
Right, and so we're wrapping up, and maybe let me take your final words and thoughts on this whole conversation. Let's situate in the context of the fact that the minister also announced the fact that our economy currently is about the 8th largest.
Yes.
Again, it brings back this whole issue of, even if we are the 8th largest, are we very attractive to investors currently? And what can we do to harness this, our 8th position, to attract more investment? So if you have to speak to the minister as your final words, what will you say to him on all that has been said on the budget, all that has been discussed, on all the positives he has given us? What can we do to make ourselves more attractive to investors?
Yes, I think I love the way, I think his presentation was impressive, and I love the way he has taken charge to come to the media to explain the figures to the ordinary people. And I think it really helps, okay, because you see, the finance minister is a very important player as far as an economy is concerned. Now, once he is continually coming out and assuring us that this is what I'm doing, this is what I'm going to do. I think he should continue on that path, and I think he should also know that, the pressures will come, okay, especially as we are getting to, political seasons. We are hoping that he can still stand on his feet to, defend the things that he is doing. I'm hoping he gets the full presidential support, and I'm hoping that he continues. Especially on the expenditure front, I think he's doing fantastic, especially when it comes to the expenditure front. Just that when it comes to capital expenditure, I think he needs to do more. Even the inner roads around Accra, I don't know if you have noticed, they are looking very terrible. I think it's not helping us. I don't know. I'm sure you have also the inner roads.
Oh yeah.
Yeah.
I think we need to look into.
It's just amazing how some potholes just erupt overnight. So you get there, you see you are in it.
If you are passing the Hacho place, it's terrible.
Yeah.
Like it's terrible. It's terrible. That Boba Road is terrible. So I think we need to spend more money fixing the inner roads. I know they are doing this, big push project and the rest, but they shouldn't leave the inner roads.
Yeah, and I guess those ones are less costly to fix. It's just patches.
Exactly, patching and making more trouble for us. Because we are all suffering. Everyone who uses car runs it. Not just those places. I think almost everywhere around the inner roads they are terrible. So maybe his mind should come there to fix it, to make our movement easier. Okay, so I think that's what I would say.
Mr. Mike Jordan.
I think my closing remarks, and also on the 8th largest economy in Africa thing, will be that yes, half year has been quite, should I say, on track, and he has exceeded most of his targets. My take to him will be to take note of most of the concerns that we have raised. Debt to GDP could be quite deceitful sometimes. Yeah. So let's check the accumulation. Let's check the debt accumulation rate and be sure that those debt are being deployed in very viable sectors of the economy in order to attract the necessary investment from foreign players. Okay. So that is it for me. Our guys in Nigeria are doing well. Beyond us just doing the government policies, there should be a conscious effort to also push the private sector or the private players. We are the 8th largest economy. I say this every day. Let's take sector by sector. Energy. Do we have a Ghanaian company number 8 in Africa?
Yeah.
No.
Yeah.
Let's take telco. If you take out MTN, which is not actually Ghanaian,
company,
what do we have? No. Right? So let's take sectors by sector.
But even the telcos, do we have a wholly owned Ghanaian?
No.
In Ghana?
I think we had some stakes in Vodafone.
Yes, we just have stakes, but like wholly owned, I don't think we
don't. We don't. So, so that raises alarm, right? If you are the 8th largest, Nigeria can comfortably take like Aligo Dangote's refinery, which is actually even number 1 in the world. You get it? Yeah. So let's make conscious effort to push the private sector. Other than that, we being number 8, we being number 3 is just a cliche. Thank you.
Indeed, let's make conscious effort to push our private sector in this our economy. Government has a role to play, but we shouldn't let down the private sector, especially when we are enjoying some goodwill from the people and our figures show some good results. Let's find a way to properly integrate our private sector. Maybe let me ask my final question. So on Ghana's economic recovery trajectory, on a scale of 0 to 10, what will you fix us currently, as of the presentation from the mid-year budget? 0 to 10, what will you fix us?
We are 6.
6, Mark Jordan?
I will give it 7.
7. So at least we are about
70, 60%.
70. That should be very good. Yes, we are now transitioning to excellence. So we're hoping that by end of this year, we should have shot up to about 8. where we know that we are the beginning of excellent, and we all do believe that we still can make Ghana better. Gentlemen, thank you so much for your time this morning. I was joined by John Che, a financial analyst, which I choose to call him a former academic, and Mark John Sikanache, who is a senior research associate with Laureus Africa. And many thanks to everybody who joined us, spend your Saturday morning joining us by ear, by eye. We are extremely grateful for your time in joining us to have conversations about how to make Ghana better. My name is Kweku Atakra Jumo, and indeed, from this conversation we've had, we can't celebrate any better without Made in Ghana by Ochiame Kwame featuring Kidi. Do well to stay safe, have a very good weekend and a good week, and God bless us all.
101.9 FM.